Well, hello everyone, and welcome to the rise of digitally connected retail investors, stakeholders, capitalism, and IPO innovations. My name is Taylor Thoen, and I'm with BTV Business Television. We're a television production and full-service digital marketing agency based in Vancouver. And I'd like to welcome our panel. I guess I'll go at the top of my screen. We have Joris Delanoue. He's the COO and co-founder of Fairmint. We have Paul Van Hoeken. He's the founder and CEO of FrontFundr, way to represent on the background there. And we have Kendrick, or Ken, as I'll be referring to him, Nguyen, and he is the co-founder and CEO of Republic. So welcome, gentlemen.
Thank you.
Amazing to be here.
Hi, everyone.
So why don't we first off hear a little bit from each of you on just a little soundbite and a little snapshot of what your company does. And we'll start with you, Joris.
Yep. Hi, guys. It's a real pleasure to be here with you. That's obviously a great panel. I'm Joris Delanoue, and I co-founded Fairmint 2 years ago. With Fairmint, founders get new superpower, fundraiser, community builder. They can finally write their own equity story and let everyone participate in the upside of their success. We are clearly part of this big movement that we see, the balance of power that is shifting from an old shareholder model to a stakeholder one. And in echo to this panel that you just introduced, Taylor, more than the rise of retail investor, it's the rise of the stakeholder capitalism, and that is huge. And at Fairmint, with a simple Invest Now button put continuously on the company's website, any company can now use their equity as it should be, like the most powerful engagement tool. And so thank you for having us today.
Awesome, thank you. And what about you, Peter? Why don't you tell us a little bit about FrontFundr? For those that don't know.
Thanks, Taylor. And also pleasure to be here today at the NCFA conference, virtual, fantastic. And thanks to be here with our co-panelists. So my name is Paul Van Hoeken, founder and CEO of FrontFundr. FrontFundr is Canada's leading online investment crowdfunding platform. So what we're doing is we're connecting companies, typically startups, scale-up companies, with the wider investor community, and with the emphasis on wider, so truly the public. So through FrontFundr, anyone who is interested in promising companies and like to invest in these companies can invest through our platform for as little as $250 and basically become a co-owner in that company. And the entire process is supported through our online process, so you can literally complete an investment in as little as 12 minutes. We're operating as a registered dealer across the country. We're from coast to coast, and so we've been now at it for 5 years, and we've done over 67, nearly 70 deals to date. I'll leave it with that. Thank you.
Wow, fantastic, good stuff. And what about you, Kendrick? Let's hear a little bit about your company, Republic.
Hi, everyone. Thank you so much for tuning in. What we do at Republic is very similar to what Paul and FrontFundr are doing in Canada, but we base in the US. We're probably by now the largest US investment platform that is multi-asset. So our vision is to empower people to invest in whatever that they're passionate about. It may be cryptocurrency, startups, SpaceX, Carter, residential real estate, and you don't have to be an accredited investor or a millionaire investor to participate. By now, we're a community of over 1 million community members, deploying nearly 400 millions into about 300 plus companies. And Republic is the only place in the US that you can buy a securities token compliantly or residential real estate, even if you're not a millionaire. But more on that later. And just a note that before Republic, I was an early employee at AngelList and helped launch AngelList in Canada. And there's no doubt that we have a strong bond, strong tie with our neighbor up north, and see the two ecosystem to be very much synergistic. And I think over time it's going to be a global ecosystem.
Awesome. Yeah, I'm smiling at that because I know Joris is like in the south of France. Ken, where are you based today? Where are you patching in from?
I'm currently in San Francisco, California.
San Francisco, California, nice sunny place. And Peter, where are you today?
I'm in Toronto today, and I've been here for a long time at home.
At home in Toronto. Awesome.
Yeah.
Well, let's get into it, you guys. I know we've got about 20 or so minutes. I'd like to hear your thoughts, and we might not get a chance to hear from everyone, but certainly, we'll go through the group. And first off, let's talk about tech innovations and the rise of the retail investor trend, because we've really seen some interesting things this year. And Peter, why don't you start? Why don't you give us your take on that question?
Sure, yeah, and we've definitely seen, Celine, a lot of action this year in terms of retail investing, and of course, the famous example recently is, or a couple of months ago, is the whole GameStop and a few other companies that were really going through the roof through online trading platforms like Robinhood, Wealthsimple, and other platforms. And so, but that's of course all about the public markets. So the public markets, we've seen indeed the retail investor making his entrance into the public markets, and now anyone basically can, from home, can start trading securities, all sorts of securities, whether it's stocks, but also derivatives, where it can get a bit more tricky, but basically everything that's trading on an exchange. And what we now see happening is really the retail investor making an entrance, fueled by, of course, technology through platforms like Kendrick, Republic, FrontFundr, to also invest in private companies. And so, if you think about the sort of the asset mix in terms of any investor really should ideally pursue a proportion in publicly trading securities, because of course there's liquidity, so you can buy and sell. But in terms of opportunities in private markets, so earlier stage companies, typically higher risk, so it can go really well, it can also go really south and you lost all your money. But the returns potentially could be very significant. So I think what is essential here is what technology enabled is really opening up those private markets and enabling the wider community, retail investors, to invest in startups from the very beginning, which of course that's where the potential could be the biggest, right? Because the whole hockey stick growth hasn't passed yet. So that's really the key, I think, fueled by technology that enables now anyone really to participate, i.e. democratizing investing in private companies.
Very good. And now, Joris or Ken, and anything you'd like to add to that? I know that there's this sort of surge coming in now into private companies because of platforms like what you folks are facilitating. So anything that you'd like to add on essentially the rise of the retail investor trend?
Yeah, I think this trend is also the direct consequences of what we started to see on Twitter a few months or weeks ago with the IPO of companies that were literally concluding with 6,000x for a single investor investing in Coinbase, for example, and that creates this big wave of so many investors that felt that it was some sort of unfair, like they were the early user at Coinbase and they didn't capture any of the upside there. And so that is an echo to what happens with GameStop and all those people that literally try to completely flip the table. And so that's a trend that just started, I think.
Yeah. Ken, you want to?
With everything Peter, Paul, and Joris said, and we can, I don't have much to add there.
Okay. Well, next, let's get your thoughts. Ken, maybe I'll start with you then. Get your thoughts on tokenized securities. You sort of mentioned it a little bit earlier, and maybe from the lens of most of the people that are tuned in here today, which will be, for the most part, investors. What are your thoughts on that?
It actually relates to the first question that you asked, Taylor, because blockchain technology does a couple of things, among many things, but very relevant to investing. It can fractionalize or break down any asset, a single stock, into many small pieces, and it enables for automation of payment settlement, of KYC AML transfers. So it ultimately allows a ton more people to participate in any single asset class and vertical. So this obviously, our belief is that down the road, a restaurant owner fundraising may not know that the entire financing stack is done on a tokenized basis, and there may be like 8,000 investors, some from Ghana, some from Vietnam, some from Montreal, investing small amounts, and all of this is premised on the blockchain leverage infrastructure for investing. So that's the number one thing that we think will change the industry as we know of it today, and it's crucial to the growth of the retail revolution.
Okay, wow, it's just a whole new world. Well, let's talk about programmable equity. Joris, what are you seeing in this space?
Well, I think that is totally as an echo to the tokenized securities, because equity is what bears so much friction, and it's an old system. It's pretty hard to raise money. It takes time. The people are not focused on their business when they do that. And at the end, it doesn't let them leverage their equity as it should be. And I like to say that in a company, you have two currency. The first one is your product, is the one that you sell. And the second one is your equity, the one that you sell to investors. And so what's very important is to make sure that we give the opportunity to founders to literally turn their equity into one of the most engagement tool. And to do that, we need to waive all the friction. And when we talk about tokenized security, for example, that's the blockchain that is eating the equity system. And we talk a lot about software eating this industry or this one. Here, that's what's happening. And I think in the next 5 years, we won't talk about tokenized securities. We'll just say it's securities, because they will all rely on the blockchain technology, because it's smooth, because it's a proof of ownership, and it's way faster to use. And the equity, as soon as you bring this new brick of blockchain in the system, well, you can literally program it. And that is huge, because that's the best way to give the founder the opportunity to design what will be their equity story. And that's what we give them as an opportunity at Fairmint.
Okay, and what about you, Peter? I'm curious on the programmable equity question. I'm curious from your perspective, because you have the opportunity to actually work with a lot of companies, and I know that they've been on, the BTV show, for example, that started out fundraising with you, and then they moved in, and up, if you will, the food chain to a stock exchange of some sort. So, what are your thoughts on programmable equity?
Yeah, I think in addition to what Joris and Kendrick mentioned, it's definitely where the puck is going. It will move on the blockchain. I think what we've been working on with our platforms is there's always you got to figure out the technology piece, but also the regulatory side. We're overseen by securities regulators, and so we build an entire infrastructure on sort of what is almost, well, it's digital, but I would say traditional technology. And I can definitely see in the next 5 years that this will move on the blockchain, and basically use that as the foundational technology for sure. And to your point, Taylor, about companies, and this is really exciting to see, is back to my earlier comment, is really enabling company to retail investors now to invest from the very beginning, is that they can really jump on the bandwagon in early days, and then indeed as the company grows and we'll have subsequent raises, we see actually more and more companies returning on our platform for follow-up raises, all the way to indeed some of them going public. And of course that's the ultimate, let's say the completion of a path, if you like, because then of course investors through FrontFundr also then have liquidity, because the company moves on a stock exchange. So now if they wish, they can actually liquidate their investment. So that's really it's really exciting to see. And again, for us as FrontFundr, and it's I do want to mention it here, as it must be a big day for FrontFundr as well, because we have 80 listings on our platform, but one of them is FrontFundr itself now. So we're drinking our own whiskey again, and we're raising for our own platform through FrontFundr. So
wow,
congratulations!
Thank you. It's always exciting. Yeah.
Oh, that's fun. Excellent. So let's talk about, and it sort of wraps into what we have been discussing here, you guys, is the IPO innovations that we're seeing too, especially in the States, with SPACs. I mean, what are some of the IPO innovations that you guys are seeing from your lens? And we haven't heard from you in a moment, Ken, so why don't you take on that?
Yeah, the notion of IPO in the old days is just going and get listed on NASDAQ or, the various stock exchanges. But the notion of it is, how do you give everyday folks an opportunity to back a company? And I think the law changed in the past 5 years in the United States, that you have regulation crowdfunding, which allows any company to raise now up to $5 million from retail. It can take $5,000 a couple of weeks, which is super, super fast and cheap. The second tier is, if you spend $200,000 in 6 months, you can raise up to 75 million from retail. That's under Regulation A. And that notion of Regulation A there is almost kind of like a medium tier. And the third component, of course, is IPO. But I think that you're going to see the law is going to catch up to, again, this retail trend in numerous ways. And it's going to enable, at one point, people to, like Peter Paul said, they don't need to know whether it's IPO, public, private. Walk into a restaurant or a startup, want to invest. They don't need to know whether it's digital securities or traditional. It's just going to happen.
Mm-hmm. Awesome. What about you, Joris? What are some of the innovations that you're seeing, IPO or, financing stage?
So what I see coming is that more and more we will have companies that will literally go public directly on their own website, like waiving the middleman, no need for investment banks anymore, just relying on their community. And to be honest, I was expecting that Coinbase would have done that, because they had like 40 million of users.
Yeah.
They could have just relied the coin on their own exchange, and that would have been so powerful. I think Brian Armstrong did his choice, and he made like such a big company, so no one would say anything. But I think the next competitor will probably have this challenge, like making sure that they can IPO directly on their own website. That would be huge.
That's interesting. Wow. And that's obviously all enabled because of the security and the, of the blockchain, right? What about your thoughts on that, Peter?
Well, in terms of regulation, we shouldn't spend much time on that. It's not the most exciting, but it's really actually key, because as Kendrick mentioned, things are moving ahead. In the US is for sure, in terms of opening up investing in private companies for retail investors, for sure the US is ahead of Canada. And I would say if you look at the UK, is sort of where it started earlier. And just to give you an idea, there, about 40% of companies, startups in the UK, you raise through platforms like ours, like Republic, like FrontFundr, from the wider invest community. So it already sort of went mainstream. The US is catching up really quickly, also because, of course, we've got the US has a federal securities regulator, so they have Reg CF, the Reg A. Here in Canada, we're blessed with 13 securities regulators. Yes. So it all takes a bit longer, but we are also hopeful that we also get the new harmonized crowdfunding rule here in Canada, which is kind of comparable to Reg CF in the US, which indeed increases limits for companies and increases maximum investments for retail investors. So everything's moving in the right direction. This is not going to stop. This is going to get really, really big. And as we are now sort of with regards to our own raise, we're talking sort of about what we're doing here is really sort of reinventing venture capital, right? Because we bring this whole new bunch of retail investors to the venture capital table.
Yeah. Okay, so that sort of leads me to stakeholder, shareholder purpose, and aligning of that, not just for profit, but of their purpose. And so, who wants to tackle that one?
I'll take a stab at this one, because you got to go back to a fundamental question of what is investing, what is ownership? Why does someone want to own something? In this case, a piece of a company and whatnot. And our thesis is that there are three main reasons. not too long ago, it's just for return on investment. There's a sensible things to do, wealth generation. And everyone knows that, it's a boring thing, but you should have your 401k, your retirement fund, an index fund, a mutual fund, and then you live your life, interest and passion and spend that. And I think the world is changing whereby people want to align that passion with profit. One of the reasons why you want to own anything is because you're strongly interested in it. You very much believe, let's say in the founders, let's say you're passionate about gender equity, and therefore you want to back that strong female founder that you see, even if you don't truly know under the technology, the understanding. So that passion got to shine through. And the last one is because it's cool. People want to be part of a narrative. We buy plenty of things, shirts, shoe, bags, watches that we don't need because, they are cool. And so if you take all of that into account, it's called social capital, how people invest. And I think the fact that it's become more and more, that's why you see this trend of retail, people aligning passion, interest, and coolness into profit as well. So I think at the end of the day, weaving all of those components in, depending on what a company is looking for, depending on what the investor is looking for, our goal is to make sure that people can find the opportunities that speak to them and meet their purpose, and not be dictating why or how people should invest in the long run.
It's an excellent point that you bring up, Ken, because we're seeing it as a trend with BTV. A couple of our episodes as of lately have all been focused on what you say, but you didn't say, which is ESG, and the environmental, social, the governance, and, that holistic approach to investing is what we are finding with our investor viewers, is that is so much more prevalent than it ever was before. And in particular, with big funds, and in particular with the millennials. And so I like what you say about, people wanting to be part of something bigger than just profits. Peter, what are you seeing with that as far as a trend on your platform? Are you seeing that sort of ask and that look for that sort of ESG component?
Absolutely. I mean, the points that Kendrick mentioned, we see that indeed live happening on our platform as well. So you see, indeed, retail investors, they want to invest in something and make a return on that. It's after all an investment. It's not a donation. But they also realize, like, hey, this is basically, I can do my money, let my money do the talking in terms of what I care about, and what are the kind of businesses that I'd like to succeed from an investor perspective. So we see indeed companies that are in impact investing. Kendrick mentioned gender equality. We also, we closed a partnership with a female entrepreneur network. And we see those deals, those companies get significant traction on the platform. So the fact that you indeed enable an entire new group of investors that traditionally been locked out, which indeed, to Taylor, to your point, includes a massive group of millennials and young professionals, say, hey, sure, I want to create a return, but I also want to invest in companies that I believe can truly make change for the better. And so, yeah, it's really, again, the empowerment of the crowds in that respect to invest in really the companies and products and services that they care about.
Yeah, no, very good. Joris, you want to touch on that and also give us, I'm getting a beep here, and also give us your final thoughts on certainly that topic, but also give us your final thoughts, guys, on takeaway for the viewer today in your space. Go ahead, Joris.
Yeah, thanks, Taylor. I think the alignment is key, and that's the sense of what we see, not only with the millennial, but also with the crypto, and the fact that people are more and more educated, and they are more and more able to access to any type of information and deal. I also think that what is key today is to build an open equity company. And my cam froze. Sorry for that.
That's okay. Keep talking.
And basically having the opportunity to invest in the product or in the company that you use, that you love, that every day you can click on. When you use Slack, for example, who would have been able to invest in Slack and to piggyback on all those VCs? Almost no one. Imagine that Slack had this opportunity for any user to every day see this invest button where they can immediately invest and piggyback on any professional investor. I think the alignment will come from this type of access.
Awesome. Thank you. And what about your final thoughts, Ken, and perhaps takeaway for our viewer here today in your space?
In addition to what has been discussed, I want to share one of the most common criticism of retail investing. I get this question all the time. Do you guys actually think it is a good idea for a student or a teacher to be investing hard-earned money into high-risk assets? And my answer to them is this: it's not about whether they should, it's about whether it's a small enough investment that if someone is new to it, that he or she can learn by investing. In life, the only way to learn and acquire skill about anything, including investing, is getting started. And so that notion of, I think Peter Paul said, that your dollar matters, what you do matters. And if this is a new way of spending, the only way to do it is to get in. And that's why some of the deals on our platform, as little as $20 to participate.
Yeah.
So the notion, I think, of this future, our goal is at one point, just like voting or recycling, everyone around the world know that they should invest privately and publicly. Not everyone will do it, but everyone should. And I think when we get there, hopefully it's going to be a very prosperous, world for all of us, and hopefully in this decade.
Awesome. Thank you so much. And that's it for time, guys. Obviously, we don't have any time for any questions either, but thank you, everyone. Be sure to visit me at my booth. I'll be there, the BTV booth in the platform, if you want to discuss anything. And also, big thanks to our panel for their insights and wisdom today. And shout out to you, Peter, for raising funds for FrontFundr. Awesome.
Thank you.
Thank you so much, Taylor.
Thank you. Thanks, everyone. Thank you.
Bye.
Thanks. Bye-bye.